What's up, everybody? It's Graham Stephan here, and let me tell you, the crypto market is absolutely on fire this week. We've got Bitcoin smashing through the $100,000 ceiling, Ethereum surging past $4,000, and enough drama to make a reality TV show blush. We're talking SEC shakeups, Memecoin meltdowns, and some altcoins putting up numbers that would make even the most seasoned investor do a double take. Whether you're a seasoned crypto veteran or just dipping your toes into the digital asset waters, this week's recap has something for everyone. So grab your favorite beverage, settle in, and get ready for the crypto roller coaster ride because we're diving deep into all the biggest stories that shaped the market this week. Remember, I'm not a financial advisor, this is just my personal take on the current crypto landscape. Now let's break down the details and see what's really been moving the markets. Bitcoin has done it again, folks. The king of crypto has finally breached the $100,000 mark, sending shockwaves through the financial world. This isn't just another price pump, it's a testament to Bitcoin's growing mainstream acceptance. Remember when Bitcoin was just a blip on the radar trading for pennies? Now it's a six-figure asset, attracting institutional investors and even governments. This surge past $100,000 is a clear signal that Bitcoin is here to stay. One of the biggest drivers behind Bitcoin's recent surge is the influx of institutional money. We're not talking about your average retail investors here, we're talking about Wall Street giants, hedge funds with billions under management, and even publicly traded companies adding Bitcoin to their corporate treasuries. These institutional players are bringing a whole new level of legitimacy and capital to the crypto market. They're not just looking for quick gains, they're looking for long-term stores of value, hedges against inflation, and a piece of the future of finance. Think about companies like MicroStrategy, Tesla, and Square, who have all made headlines with their Bitcoin investments. These are savvy companies with experienced financial teams, and they're betting big on Bitcoin's long-term potential. This institutional adoption is a game changer for the crypto industry. It's no longer a fringe movement, it's becoming a core part of the global financial system. The upcoming Bitcoin halving, an event every 4 years, cuts the creation rate in half. Historically, this has led to significant price increases. With global uncertainty and soaring inflation, Bitcoin's scarcity makes it an attractive alternative. Institutional adoption in the halving cycle could propel Bitcoin to new heights. In a move that sent ripples through the crypto world, former President Donald Trump nominated Paul Atkins, a well-known crypto advocate and former SEC commissioner, for a key regulatory role. This nomination, if confirmed, could have major implications for the future of crypto regulation in the United States. Atkins has been a vocal proponent of blockchain technology and its potential to revolutionize finance. He's also been critical of the SEC's heavy-handed approach to crypto regulation, arguing that it stifles innovation and pushes companies offshore. His nomination signals a potential shift in the U.S. government's stance on crypto, from one of skepticism and caution to one of openness and support. This could have a ripple effect across the globe, as other countries look to the U.S. for guidance on how to regulate this emerging asset class. What sets Atkins apart from many traditional regulators is his focus on both innovation and investor protection. He understands that the crypto industry needs space to grow and evolve, but he also believes that investors need to be protected from fraud and manipulation. During his previous tenure at the SEC, Atkins was known for his tough stance on corporate malfeasance and his commitment to transparency. He's not afraid to hold powerful institutions accountable, and he's likely to bring that same energy to the crypto space. This balanced approach is exactly what the crypto industry needs right now. We need regulators who understand the technology and its potential, but who are also willing to crack down on bad actors and protect investors. Atkins's nomination is a potential turning point for the crypto industry. If confirmed, he could usher in a new era of crypto-friendly regulation that fosters innovation while safeguarding investors. This would be a major win for the industry, providing much-needed clarity and legitimacy. Of course, there are no guarantees in the world of politics, and Atkins's confirmation is not a slam dunk. he's likely to face opposition from some lawmakers who remain skeptical of cryptocurrencies. However, his nomination is a positive sign that the tide may be turning in favor of a more balanced and pragmatic approach to crypto regulation. This could pave the way for greater mainstream adoption, institutional investment, and ultimately, the realization of crypto's full potential. Alright guys, let's talk about Ethereum. This week, ETH smashed past the $4,000 mark, a level we haven't seen since March. That's a serious gain, and it's got everyone talking. Now this wasn't some random pump and dump. There are solid fundamentals driving this growth. On-chain activity is through the roof, with tons of transactions happening on the Ethereum network. That tells you people are actually using it, not just speculating. And if you're into technical analysis, the indicators are looking pretty bullish too. We're seeing a strong RSI, the 200-day moving average is trending upwards, all positive signs. Plus, with the Ethereum 2.0 upgrade well underway, there's a lot of excitement about the future of this platform. Remember, Ethereum isn't just a cryptocurrency, it's a whole ecosystem for decentralized applications, NFTs and more. So as that ecosystem grows, so too does the potential of Ethereum. This recent price surge could just be the beginning. One of the biggest drivers of this recent Ethereum surge is the increasing popularity of staking. Now, if you're not familiar with staking, it's basically like putting your ETH into a high-yield savings account. You lock up your coins to help secure the network, and in return, you earn rewards. It's a win-win. You get to earn passive income on your crypto, and the network gets more secure. Now, with the Ethereum 2.0 upgrade, staking has become even more attractive. The returns are better, and it's easier than ever to get involved. This has led to a massive influx of ETH being staked, which reduces the circulating supply and puts upward pressure on the price. It's simple economics, guys. Less supply, more demand, higher prices, and this trend is only going to continue. As more people learn about staking and the benefits of Ethereum 2.0, we can expect even more ETH to be locked up, potentially driving the price even higher. So, the big question on everyone's mind is, can Ethereum reach its all-time high again? And not just reach it, can it surpass it? Well, it's definitely possible. We've seen Bitcoin do it, and Ethereum has a lot going for it right now. The fundamentals are strong, the technicals are looking good, and the Ethereum community is more active than ever. Plus, with the ongoing development of Ethereum 2.0, there's a lot of potential for future growth. But remember, investing in crypto is always a risk. It's a volatile market, and there are no guarantees. Past performance is not indicative of future results, as they say. So, do your own research, don't invest more than you can afford to lose, and remember to take profits along the way. Ethereum is an exciting project with a lot of potential, but it's important to approach it with a level head and a long-term perspective. Alright guys, in other news, the SEC has struck again, this time denying several applications for Solana-based ETFs. This news, first reported by Eleanor Terrett, sent shockwaves through the crypto community. Many were hoping that Solana would be the next cryptocurrency to get the ETF green light, but it seems the SEC isn't quite ready to go there yet. Now, for those who don't know, an ETF, or exchange-traded fund, is basically a basket of assets that you can invest in on the stock market. It's a way to get exposure to an asset class like Solana without having to directly buy and hold the underlying cryptocurrency. ETFs are popular because they offer diversification, liquidity, and are generally considered less risky than investing in individual assets. So when the SEC rejects an ETF application, it's a big deal. So, why did the SEC reject these Solana ETFs? Well, according to their statement, they have concerns about Solana's liquidity and market maturity. Basically, they're worried that the Solana market isn't big or stable enough to support an ETF. They're concerned about potential market manipulation and the ability of investors to buy and sell their ETF shares easily without causing major price swings. And you know what? They're not entirely wrong. Solana is still a relatively new cryptocurrency, and its market cap and trading volume are significantly smaller than Bitcoin and Ethereum. This means that large trades could potentially have a bigger impact on Solana's price, making it more susceptible to manipulation. The SEC is essentially saying that Solana needs to grow up a bit, become more established, and prove its resilience before they'll even consider approving an ETF. So, what does this rejection mean for Solana and the broader crypto ETF landscape? Well, for Solana, it's definitely a setback. An ETF approval would have been a major catalyst for mainstream adoption and institutional investment. However, it's not the end of the world. Solana is still a promising project with a strong community and a growing ecosystem. This rejection might just slow things down a bit, forcing the Solana team to address the SEC's concerns and focus on building a more robust and mature market. As for other crypto ETFs, this decision highlights the SEC's cautious approach to regulating the crypto industry. It's clear that they're not going to approve every crypto ETF that comes across their desk. They're going to be selective, prioritizing investor protection and market integrity above all else. So if you're hoping for a flood of crypto ETFs hitting the market anytime soon, you might be disappointed. The SEC is taking a slow and steady approach. And it could be a while before we see widespread approval of crypto ETFs, especially for altcoins like Solana. Memecoins, you gotta love them, right? Well, maybe not always. This week, the crypto space was abuzz with the dramatic rise and fall of the Hawk Tuah Memecoin. It skyrocketed 900% in just 24 hours. But hype is a fickle beast. Hawk Tuah plummeted 91% in hours. A lot of people got burned. Investing in Memecoins is like playing the lottery. Remember, always do your research. The Hawk Tuah drama didn't end there. As you can imagine, the crypto community was not happy, not one bit. Accusations of insider trading and market manipulation started flying faster than a Tesla Roadster in space. People were pointing fingers at the project developers, claiming they had something to do with the crash. Social media was blowing up, with angry investors demanding answers and accountability. The hashtag #HawkTuahScam was trending on Twitter, and let me tell you, the comments were brutal. It was a full-blown PR nightmare for the project. Now, the project lead Haley Welch has denied any wrongdoing, saying that the team was just as surprised by the crash as everyone else. They're claiming it was all just a coincidence, a perfect storm of market forces that they had no control over. But let's be real, in the court of public opinion, they're already guilty. This whole situation just highlights the importance of transparency and trust in the crypto space. When you're dealing with people's money, you need to be upfront and honest. Otherwise, you risk losing their faith. And once that's gone, it's gone for good. So, what can we learn from this whole Hawk Tuah debacle? It's a stark reminder that the crypto market is still the Wild West. There are risks, and not everyone plays by the rules. Do your due diligence before investing, especially in Memecoins. Don't blindly follow the hype or influencers. Research the team, read the white paper, understand the tokenomics. Only invest what you can afford to lose. In crypto, anything can happen. Hawk Tuah's future is uncertain. Can it recover? Only time will tell. It'll be an uphill battle to regain trust. This serves as a cautionary tale for all. In crypto, reputation is everything. Once tarnished, it's tough to rebuild. Let's work towards a more transparent and trustworthy ecosystem. Alright, let's move on from the drama and take a look at some of the top performers in the crypto market this week. CurveDAO. Token surged 129.67%, Hedera, Hashgraph rallied 106.03%, and Memecoin gained 88.70%. It wasn't all sunshine in the crypto market this week. Some projects celebrated, others faced losses. For every winner, there's a loser. Radium dropped 12.23%. It hit resistance on the Solana blockchain. Even the best have off days. Bonk shed 8.17%. The Memecoin hype is fading. Invest in Memecoins at your own risk. Stellar declined 6.31%. Patience is key in the crypto game. So, what does all this mean for the overall crypto market? Well, despite some of the drama and volatility we've seen this week, the total market cap is still sitting at a staggering $3.69 trillion. That's right, trillion with a T. And let me tell you, that's nothing to sneeze at. This just goes to show you crypto is here to stay. It's not just some fad or passing trend, It's a fundamental shift in the way we think about money, finance, and the internet. And the sooner you realize that, the better off you'll be. Now, I know some people are still hesitant to jump into crypto, and that's okay. It's a new and complex asset class, and it's not for everyone. But if you're willing to do your research, invest responsibly, and ride out the volatility, the potential rewards can be life-changing. Just remember, this is a marathon, not a sprint. That's it for this week's crypto recap. We covered a lot of ground, from Bitcoin's historic $100,000 milestone to the drama surrounding the Hawk Tuah Memecoin. And of course, we can't forget about those impressive gains and losses in the altcoin market. Now I want to hear from you. What are your thoughts on Bitcoin's incredible run? Are you bullish or bearish on Ethereum in 2024? And what about the whole Memecoin craze? Let me know in the comments below. Don't forget to like this video if you found it helpful, share it with your friends who are interested in crypto, and subscribe to the channel for more weekly insights. Until next time, stay informed, invest wisely, and as always, happy investing.